So over the next hour, in partnership with our good friends at IDC, the premier global market intelligence firm, as I understand it, thank you, Thomas, we hope to give you some of the key takeaways on possible use case categories and, very importantly, specific compelling use cases that could provide maximum monetization opportunities for banks, and in the context, mainly in the context of open banking. We will also talk about successful case studies and ways you can get started on the opportunity in the second half of the webinar. Thomas Zink is the Research Director for IDC Financial Insights and leads IDC's European Financial Services research. Thomas's core research covers digital transformation in banking, retail payments, global transaction banking, and wealth management. So welcome, Thomas. I know you've already answered a couple of questions, but welcome to the webinar.
Hi, Paul. Great to be here.
So just moving on this webinar, we plan to go through the following 4 agenda points. Thomas will cover the first 2, and Karthik will cover the latter 2. So I think with that, Thomas, I'd like to hand over to you, if that's okay.
Thanks, Paul. Let me know when the slide comes through and I kick it off.
Perfect.
Great. Hi, good afternoon, everyone. Thanks for your interest in open banking, and particularly, I think, the most important topic of the post-PSD2 deadline in September is how can I really monetize my investments in open banking, and what really is open banking going to mean for my organization and the way how I continue my digital transformation journey. And we have been obviously scratching our heads on this topic as anyone else has, and as a result of that, been building a market model where we really try to build the revenue opportunity, or to model the revenue opportunity for financial institutions in open banking use cases. And I'm going to share a little bit more about that in a minute. So open banking clearly has turned into the new hype term. It is also a global phenomenon. We see really banks around the world investing in open banking, and we see, however, very different approaches that they're taking. And then clearly Europe kind of made a massive leap forward with the PSD2 regulation that really forced each and every bank to really build that basic API capabilities and opening up to mandated APIs in the process of that. We also see other banks around the world really doing that, and very often in quite a different way. Particularly in Asia, for instance, we see really banks driving open banking by themselves, so it's out of their own interest. And really cool examples here, obviously, you find in Singapore and particularly in China as well as in India. So I would not quite subscribe to your point earlier, Paul, that Europe is leading. I think we see many leaders, and there is not really a region that is much ahead. I think probably in broad adoption, yes, there is a lot of activity in Europe. But when you look at innovation, other regions clearly take the lead because obviously due to the regulatory aspects of PSD2, most of the European banks were quite preoccupied with ensuring compliance first, and only now start thinking about what comes next, actually. So open banking, obviously, as it has emerged as this intense hype term, also brought quite a number of challenges. And a lot of organizations that I'm talking to, they're still trying to understand what is the opportunity. And that is really spanning from very simple, very basic question of, is this hype really real? Or is it just a hype that will go away 2-3 years down the road? Will it matter to customers? Do they really care enough to really try third-party apps and really change completely their banking experience? And I guess still one question that pops up quite a lot is around, are we digging our own grave? Because we are potentially losing essential touch points to the customer. And obviously, some fintechs and also tech fins are really waiting to jump into this opportunity and become a mediator between the financial institutions that might then be just degraded to transaction processors or product providers. But at the moment, I don't think we are at that point, and I think we are at a point still within the industry to really address that issue. However, how the journey will go remains to be seen. From what we hear from customers, obviously as well, there is a genuine interest in better customer experience, and I really see open banking as a key tool to develop that. Simply because you give the customer a choice of the experience that they want, for instance, when you look at channels, or kind of forced to move away from that product-centric view that we have today in banking and build new customer-facing, value-adding services that really make a difference to the customer and not just talk about our products. Another area where we see still a lot of uncertainty is now with PSD2 more or less ticked off. Are we done with open banking? Was that it? And I think there's still a lot of uncertainty of how this open future looks like. I think they are floating obviously thousands of different definitions of open banking as well. Some really look more at the technical aspects around APIs. Others talk about the ecosystem. Others talk about the opportunity to partner with fintechs. So really multi-different angles how to look at open banking. And I think the lack of a clear definition is still also quite a challenge for the industry today. I think a question that will pop up more and more nowadays is where will we get the budgets to really finance investments in open banking moving forward? Because, well, with PSD2, obviously budgets were not the issue because there were compliance funds available. But with those ticked off at least, or a lot of those requirements ticked off for the moment, obviously we need to think about the business case of what a future use case could really bring to the organization, either in terms of really monetary gains or in benefits to the customer experience. And I think that is really where every bank that I'm talking to is really thinking about and really trying to determine where the opportunity in open banking is. Then taking that down a level to the more operational issues, and there we still see data as one of the biggest issues or challenges that banks are facing. Traditionally, obviously, very complex legacy architectures have been built, many different data formats. Data quality, not necessarily something that is universal across the organization. Data quality also at times very poor. So we hear from a lot of banks that they would rather use external data than their own because they don't trust their own data. Obviously, exaggerating a bit here, but data quality remains a really key concern, as well as data management and data governance is really to make sure that the right information is also shared with the right consent and the approved third parties, for instance. And obviously, as always, legacy constraints remain one of the key challenges that organizations are facing. A lot of the core systems that they have either built themselves 30 years ago or maybe 20 years ago, and also just some of the solutions that they may have bought in the last 10 years, they are not really API enabled. And now it's obviously a challenge to decide, do I really want to modernize my legacy infrastructure? I just built the interfaces to connect my legacy infrastructure and kind of use a platform to build that connectivity layer. So a lot of big questions that have to be answered. And in our view, the answer is really to come up with a clear strategy on how you want to modernize your organization, rather than just looking at tactical fixes that might help you comply, for instance, with a particular set of regulations, but in the long term will always be a barrier for you to kind of build new business cases or use cases around open banking. And lastly, obviously, security remains also a crucial component of that. We see definitely how banks are, or how the industry, the technology makers very often go out with bold statements and say APIs are secure or blockchain is secure, but intrinsically that's not the case. I mean, it's wherever there's code, there is also the risk of flaws and errors in that code. So you really have to kind of build the right security layer around your open banking activities to make sure you don't suffer from bad leaks in the future. I'm sure that there will be data leaks coming out of open banking, but it's essential to today make the right decisions on how you want to deal with those challenges. So now let's get to the more interesting stuff, and I already mentioned it, our revenue model for the open banking opportunity for financial services companies. And what we did here is that we started with thinking about what potential use cases are there that banks can monetize. And when we started this journey about half a year ago, we ended up with a list of 60 to 70 use cases, and then started to model each of those use cases from the bottom up and really try to develop a view of what is the revenue opportunity for banks. And what I'm showing here is really certain categories of those use cases that we have conceptualized, and I'll only share this category view in today's session, but we are planning to release the next version with individual use cases quite quickly. So the overall opportunity for open banking we have quantified to about 35 billion in the year 2023. That is a number that doesn't mean much, but when you put it into relation to the overall revenues of the European financial services industry, this already will mean 5 to 6% of the overall revenue opportunity. And we believe that this is a feasible number. It obviously all depends on many factors that where we had to take assumptions when we built this model, because there is no data available yet, and we are really trying to write the future here a bit. But as I said, we built the model from bottom up, so we are quite sure about many of the insights that this will bring. So when we look at the opportunities around open banking, the biggest opportunity we definitely see around digital platforms. So banks really either allowing third parties to come in and offer supplementary services to their own customers, or also kind of use information and insights that they have about the market and use that with other customers to really sell insights, sell data to the market. And this by far is expected to be the biggest revenue post, and I think of the overall open banking revenues, we assume that this will lead up to about 19% of the overall budget or overall revenues. Second, we expect marketplaces to come in quite high. So marketplaces, I think, quite straightforward. I'll talk a little bit more to the individual use cases, so I'm not spending more time on this here. Anything as a service, I feel, is a really interesting one, and that is probably also the most difficult of all the use cases, or all the use case clusters that we have categorized here, because it really means a fundamentally different model of how banks develop a new business model. And that means instead of just pushing products and transactional service to customers, it means I use capabilities that I have built internally in terms of technology and make these available to my customers. And great example for that, for instance, is KYC as a service. So a bank has, well, I think by far the most difficult and stringent requirements when it comes to KYC, and they have invested a lot of money in making in managing KYC for themselves. So obviously they could become a player that offers KYC services to any other industry player that has a more limited set of KYCs. But the opportunity around anything as a service is really sheer endless. So wherever you have established a best of breed or really potent capability, this can potentially be externalized and turned into as a service model. So let's talk a bit more about individual use cases within the four categories that we just mentioned. So around digital platforms, we really see two key opportunities. The first one is around data monetization. Clearly, that's a term that's a bit negatively connotated, but essentially what this really means is that the banks will use the data that they have on their customer and not really sell it to the market. We see how a couple of banks, particularly in the US, have been started to do that. But really, I think with privacy regulations, that is not an easy feat. But obviously what we're talking about here is aggregated, normalized data that where you can't identify an individual. And there is a lot of intrinsic value in those, for instance, payment transactions data, because other industries such as retail or real estate development, they are interested in those data points because they need to understand how people are spending money in a particular area, for instance, to evaluate the usefulness of opening up a new location in that area. I think the bigger opportunity for banks, however, is something else, and that will be on using the data and building some interesting insights out of it that they then will return to the customer. And I think really that these value-added services built on top of the data, that's where the ultimate opportunity for banks is sitting, because that will also move them out of that challenge that they have today, where they are in a highly commoditized business, and be able to really compete on being a trusted advisor to the customer and really giving them insightful ideas, also maybe benchmarking information, or any kinds of advice that help them to run their business or also run their personal financial needs. Here we also obviously see transaction account services, and that is really more going down the PSD2 avenue, where, well, monetization potential is to some degree limited by the regulation, clearly, but ultimately it's about making the customer, or offering the customer a better customer experience. And while this is extremely difficult to quantify, obviously, there is intrinsic value in offering better customer experiences to the customer. It increases stickiness, it increases also cross-selling opportunities, and that is really where we expect also quite considerable amount of intangible effects to come out of digital platforms. Marketplaces, obviously there will be two types of marketplaces, and both will be, we already see emerging in today's environment. Banks building out their own marketplaces where they also embed increasingly third-party products. So obviously it has started much earlier in the fund management space, for instance, but increasingly we also see banks looking at other parts of their business where there is opportunity to engage, well, to either offer a broader diversity and therefore better experience to their customers. For instance, in the deposit space, and I will talk about that example a bit later. Deutsche Bank has really done some interesting stuff here. But you really can also see that in other other areas emerging where banks really try to leverage data analytics to really move close to the customer and really give a broader spectrum of advice. And even if that just means this is the most suitable product for you, this is maybe how you can improve how your insurance is set up. So really a lot of cross-pollination that can happen here with adjacent products. External marketplaces obviously have become a reality already. We see that quite a lot on the personal loan side, also on the housing loan market, where basically a customer can easily go and compare different rates. But where these are still lacking quite often is that they are not really integrated with any of the bank's offerings. So from that marketplace, you still have to then go to the bank, have to do all the KYC with that bank, and go through that tedious process. So I think what we will expect to see moving forward, that a lot of that process will be more frictionless and more simple for the customer, and therefore also more reliable and more transparent as the banks are allowing making more and more information, more products available for those marketplaces. Anything as a service really is my personal favorite, and we differentiate here between two different kinds of anything as a service scopes. First is really around core banking services, not meaning the system here, but really services that are natural to financial services, and where they have a unique position to offer services to that particular market. I already mentioned KYC as an example, but this can really be anything also in the AML space, can be identity verification, can be also then more line of business specific applications, like for instance, one thing I like a lot is treasury as a service, and we did a research recently where we actually tested that with corporate treasurers, and there was massive interest. I think 70% of the respondents said they would really be interested in a treasury as a service model, for instance, because they don't want to deal with that day-to-day operations of the treasury, and rather focus on more strategic decisions, while a service provider, such as a bank, for instance, can take on really the day-to-day operations and optimization. But then this also means extended services. So ultimately that can mean pretty much anything. So a bank that has built a very efficient salary management system internally, for instance, could start to externalize that and offer that as a service to their corporate banking customers. So the opportunities here are really quite universal, and I think we will really see a lot of activity in this area where banks will try to break out of the narrow confines of their traditional business model and come up with these new as-a-service models. However, it's going to be a very tricky and difficult way to get there, because it's really essentially requires extreme automation or hyper automation, because you really have to have basically 100% straight-through processing to really deliver that to the customer in a good user experience. It also will mean a lot more focus on data analytics and insights to really, deliver this experience at scale. And lastly, it would also require the cloud, because you have to move closer to the customer and basically integrate very tightly with the customer system. And I think the best vehicle to do that will obviously be in the cloud, particularly as processing or data analytics will require more and more processing power. And this brings me to the last area I want to talk about today, which is cross-industrial partnerships. And I mean, this is an area where we have seen a lot of activity over the years already, but it always was quite difficult because there was a lot of uncertainty. The technology wasn't quite there to really build the connectivity with your partners. And generally, this is an area where we expect a lot of ad hoc activity. And so it's really up to the banks to go out to different partners, different industries, and come up with ideas of how you can, develop or generate more value by working together with a partner. And we have come up with a couple of use cases here that we have seen already. Very popular example, a very common example is already with the retail industry, where you can overlay data points of both sites. Obviously, GDPR is not making that easier, but we have seen how banks outside the Euro region have done that and really come out with very detailed micro segments to do that. But it also means customer spending analytics, also moving closer to the customer in terms of being more relevant to the customer when they take these emotional purchase decisions, like, for instance, buying a new car or buying a house, because at the moment, the banks are a bit detached from that. But once you build the partnerships with the car dealers or with a real estate agent, that you basically become a part of that purchase process, it's going to be a much richer experience for the customer, and obviously allow the banks to really drive very different solutions solutions to their customers, which increasingly will mean advisory services, facilitation services. There obviously, and I think Paul mentioned that at the beginning, there are a lot of open banking activities that we see in the moment. A lot of that is very identical. In Europe, obviously, a lot of that is focused as well around the PSD2 requirements. But we really see a couple of banks globally that really seem to push the ticket here in open banking. And one of those examples, for instance, is Citi Corporate Bank, which really has come up with some really interesting new approaches to offer more information-based products to their customer. One example, for instance, of that is the Liquidity Manager portal, which is basically a platform where customers can aggregate account data from multiple financial organizations from around the world and really get a view of everything within a single service. And on top of that, Citi is offering some real powerful analytics that that allows them to forecast liquidity requirements, for instance. And the customers can really self-service that to some degree, so it's very customizable at the client and user level. And I think really coming up with those solutions that help customers make their life easier or allows them to avoid heavy investments in their own technologies or in building up their own analytics capabilities and providing that as a service to the industry, that is going to be a massive opportunity for banks moving forward. Another one, and that's less open banking, but still hits the same direction, is treasury diagnostics, where the Citibank basically takes a survey with their customers and then really comes up with a personalized benchmarking report that gives insights into the client's individual treasury performance. So really, how am I doing compared to my peers? And I think these are the kind of services that customers increasingly will be looking to when it comes to open banking and when they decide what are their preferred banking partners.
Tom says, Paul here, just in the interest of time, because I want to leave some time for questions as well, we need to close out in a few minutes, okay?
Sure. I'll wrap this up. Another bank that really is getting it right, we see in Deutsche Bank. So they have done a lot of work around, obviously, the compliance part, but they have built out an API marketplace, and they are now really looking at how can those APIs really be monetized as well. So they have come up with a wide range of APIs. The development on the testing part of the aspect of that is free, but then once developers are building a complete tool, they will obviously charge for the consumption of those APIs. And there are really some interesting ones around customer insights, for instance, getting access to personal data, to addresses, to text-related data. Age verification was a really interesting one, and I think that will be more and more important also for other industries to have a verified age of your customers. Income rent check was another one to really deal with that tough housing market that we have in Germany at the moment. So basically, customers or landlords can pull information from the bank systems that gives them verified information about how much a tenant, what his real income is. So really cool ideas that they have been productizing here. And with that, I am already at the end of my presentation. So just a couple of points I wanted to point out again. So data by itself only has a limited value to the customer. So the real monetization opportunity is about building a set of value-added services that bring external insights, analysis, and better customer experiences to the customer. So I think that is really the big challenge that we have to go through, because the data by itself is not really what the customer is looking for in the first place. And therefore, it is really essential to work with the customer to understand what are the specific services that are valuable to them. And also then, while you are developing those, really work closely with the customers, keep testing, keep working at improving the customer experience, so that you really go to market with something that's relevant to the customer and not something that's came up in a lab a bit in isolation. So another point is obviously, and that's because I hear a lot of banks now being in a bit on a wait and see position when it comes around open banking, is obviously it's very difficult to make the business case, but I do not recommend to wait for others to lead, because what another bank organization, what another organization is doing might not be extremely relevant to you. So really focus on your individual strengths, work with your customers, and see what's available in the ecosystem, and then try something new. I think that's really the big opportunity that we have now. And everyone is really in that trial and error phase. So I think it's really also essential to break out of this. There is no room for mistakes in banking. And surely there are certain aspects of banking where there is no room for mistakes, but others there is. And I think customers will be understanding if they get more value out of it in the long term. And lastly, today, while we are in that wait and see stage, at least focus on doing your homework, which means internally really focus on improving on data quality, on data governance, security, and privacy, and externally start engaging with the ecosystem, build those relationships, and also work closely with the regulators, because they also don't know where the journey is going, and often a lot of them are also quite concerned about some of the impact that open banking may have. So I think it's really important to keep the regulators in the loop of how the industry is transforming, and therefore really drive, everybody is pulling into the same direction. With that, end of it, I'm sorry when I've ended a few minutes over.